Hey everybody, we are here with Jerry Parker. Always a fan of Jerry's. He is just a great dude. Really, talented guy, very smart, just understands trend following like nobody I've ever met. If you really want to listen to somebody who really has a lot of the answers, has dug through, done the research, been there since day one of Turtle Traders all the way till today, you gotta definitely hear from Jerry Parker. How are you doing today, Jerry?
Well, after that amazing introduction, I'm doing great. That's the best introduction of all time, I have to tell you. Um, 2024, I finally get an A plus introduction. Congratulations! I'm totally psyched now. I'm woken up. I quit drinking coffee. I quit drinking coffee like a month ago, but now I'm wide awake. So thank you very much.
Nice. Well, I also have to ask you because I guess I drink a lot of coffee. I actually switched to mushroom-based coffee, the lion's mane stuff, probably about a month or two ago. So I'm wondering, why did you stop drinking coffee and how did that happen?
I don't know. It's just like an old man's attempt to get a little more strict and a little bit better diet. It probably doesn't make any difference at all. My wife doesn't think it's worth doing, but I've got my doctor's checkup coming up here, the annual checkup in a few weeks. So I'm going to see if it makes any difference. If not, I'll probably work out so much and I felt so much better. I still like the red wine, once a week or once a month. But so I was just like, yeah, what else can I do to see if I have the discipline to, quit and do things for my health. But I used to make fun of people who, wouldn't drink red wine or coffee. So now I little embarrassment on that, but we'll see what happens with, I'm just always trying something new.
Yeah, I mean, I haven't drank red wine in I guess 14 years now, probably. It's
Oh, wow.
it's been a long time since that either. So but I can definitely tell there is a difference. Hydration is a huge difference, and honestly, like if our bodies really need to be hydrated and we really need electrolytes, that also has to come into play from not drinking coffee. So I'm sure it actually helps. It has to help.
Yeah. Yeah. We'll see. I'm still drinking my poppy sodas. This is like the greatest thing ever, poppy. But
Oh, I like that
one of
brand.
these, maybe I'll give those up too. If someone writes an article, I'm really susceptible to these pseudoscience articles that I read every day about ways to be more healthy. But yeah,
Well, I mean, it's the thing I've seen about with you over the years, and just anybody who's a good trend follower, is the fact that you guys, especially you, over time, I see a lot of people in trading get complacent. You've never been one of those people. I've never noticed that. You really seem to always trying to learn, always trying to talk to other people. You have a great community that does on trend following. What's that, 7:30 in the morning on Fridays?
yes,
Yeah, 7:30 in the morning on Fridays. If you guys are on follow Jerry and on Twitter and on Spaces, they have a great group of guys that go over trend following every Friday at 7:30 in the morning. And like these are things like at the point of your trading, like you probably don't have to do any of these things anymore. But the thing is like you want to and you're always getting better and like you're almost obsessive about it. I'm not saying that in a bad way. I'm also obsessive about everything too. I also am susceptible to articles because I'm constantly reading stuff and whatever. Um, but how do you think that plays into, your development as a trader? And have you always been that obsessive since you started?
I think so. I've been very obsessed with trading and being better and learning and digging deeper. On the face, trend following looks pretty straightforward, and it is. And I don't think you have to understand what's below the surface so much to be successful, but it really does make it more interesting. I've learned a lot from Richard Brennan and Moritz Seibert on the spaces and in podcast, and especially Neil's Top Traders Unplugged CTA series of last year. I think are just amazing. I mean, could not okay, just like a new movie coming out. I would just wait for these podcasts so I could learn something or disagree with something. I'm pretty argumentative and challenging, but I have been put in my place and I have gotten off those spaces a few times and realized that people were pointing out things that I needed to reconsider. And I did, and I changed. So I am not prideful in that way. I'm very competitive. And if I can improve, the way I trade, I'm pretty happy to steal it from others and give others credit as well. And they definitely deserve it but most of the time when I am argumentative, no one really agrees. So there's a lot of different ways that people trend follow and trade all these markets. And there's not a lot of agreement, I don't think, on some pretty important subjects and aspects of trend following. But it certainly makes it fun to get into those debates.
Yeah, no, I mean, I think the one thing that's awesome is, and the one thing you and I agree on a lot is I love the argument, and it comes up a lot. It's a huge thing in the trend following space, which is, to vol target or not to vol target. That seems to come up on your guys' spaces all the time. But, for me, I also know, like, like you said, like there's different ways to trade the market, and some people can't handle it. But the argument of saying like you'll make just returns that are just as good as someone who doesn't vol target is not true. And that's the thing that you're always trying to say, and that I'm always trying to say is like, yeah, you can vol target if you want to. That's on you. But to say that you're actually going to have better returns than someone who doesn't is not true. And so I like that argument that you guys always bring up. And I know that there's everybody from across the aisle, you're saying something, I'm saying something, everybody else is saying something else, but it's really interesting to just kind of hear everybody's opinions on it. But I also think like some people they can't handle it, like, and I understand that. That's okay. But just say like I don't like it, I don't like it. That's an easy way to say it.
Yeah, it gets really emotional. And it's people's businesses, and trading is very personal, and it's very, you don't like to lose money. And sometimes over the years, when I was younger, especially, I would feel I'm less of a smart person if I'm losing money, or especially relative performance. We all just get bogged down we're temporarily in last place in a month. I made less money or lost more money than anyone else in a certain month. That's just going to bother me for a while, and it really shouldn't. Like I've said before, the whole point of trend following and systematic trading in general is to grade yourself, at least initially, at least over a year or two period. Did I do the right things? Did I follow the rules? And eventually those rules have to be good, and they have to turn into making money. And if you just are the best in the world at following rules, but you never make money, well, that's not going to work. But most trend following systems and CTAs can make money. And so the key really is to focus in on and grade yourself based upon how well you followed your rules, and not get too caught up in all the competition and getting so uptight if you underperform. It's really has nothing to do with you personally.
Yeah, I mean, I used to be a professional athlete, and doing that, it was never about being better than everybody because my sport was very individualized. It wasn't a team sport. And with what I did, it was how do I execute my plan better than everybody else's? That's all I can do. I can't be better than everybody else. I can just continue to execute what I do over and over again and make it feel smooth, make it feel good. Look at someone like in basketball. You got Steph Curry's best shooter ever. He's just trying to shoot the exact same way every single time, make it come off his fingertips the same way, like that's the same thing with trading. And it's very interesting, and I always like the shooters analogy from basketball, just considering it's 40% win rate is pretty normal on a good trend following system, even less sometimes. And you look at great basketball players like Steph Curry, and he's shoots at 40% from three. And really it's a you got to constantly just understand you're not going to get every single trade right, and that's okay. and you got to have your risk management set up. And then also, like you said, everybody compares themselves, we all do. But really, at the end of the day, like our idea of trend following systems, if you really back test, you really do the work, you see that it wins over the long run. It doesn't win every single year. It doesn't beat out everybody. Something you and I have talked about before, which is if you're a certain type of trader, let's say you're a short-term trend follower, you're going to do very good some years, better than someone who's a long-term trend follower. And then other years, the longer-term trend follower is going to do better. But in the long run, most of the time, the longer-term trend follower is the one who does the best in the very long term. So I really think that over time, good traders usually become more long term. And I'm wondering, when you started as a turtle trader, I remember the systems. I only read it in the book, so I don't know firsthand like you, but I remember the systems looked a lot more short term. And then as time has gone on, I'm wondering, have you gotten more long term in your trading models?
Oh, yes. That's really the main, or maybe even the only really change in the strategy my strategy has just become longer term. But I did it because it worked better. And initially with the turtles, the systems were traded short, they were shorter term. And then I think with some personality and some goals that were different when you get out and start trading money um, for clients, 50, 60% drawdown is okay if it's your own money. And so the shorter term systems with lots of leverage are would be something you could do on your own maybe. But when you get out to the trying to get clients and build a business, you want to not use so much leverage, make 15% a year if you can. That'd be fantastic, right? And then, but for me, it was just being a slave to the back test. I remember asking people like who were putting together the turtle systems, I'm like, why did we do this? And they were like, because we don't think that's very optimal. It doesn't test out well. And they were like, oh, that's just my personality. And I was like, oh crap, I don't really do anything based on my personality. I think I'm not an advocate for find a system that suits you and that you like so you can do it. I think there might be a small little truth in there, but it's so minor I couldn't even hardly find it. Really, what you need to do is embrace what works, which is pain, suffering, discomfort, small losses, big wins, infrequent big wins, 30, 40% win rate. Just list all of the characteristics of proper trading, trend following, for instance. And it's nothing anybody wants to do. And that's why people always say, I just got to get more disciplined. Yeah, you're not disciplined because it's hard and it's no fun. And it goes against kind of human nature. And that's why it probably works. So what do you want to do? You want to feel good and pat yourself on the back that you're trading this strategy that not only am I expecting to make money, but I'm going to really enjoy this. And if your son or daughter came up to you with an idea about that, about how the world works, you would say, that is not how the world works at all. If you're lucky enough to get money out of the market, you're going to have to work. And it's not going to be in this perfect way that you want to do it. It's just going to be more challenging and more counterintuitive to human nature.
No, that's great and well said. And it's true, like there's so many people in trading who really want things to fit. I had one of our subscribers, and this is why I mentioned to you about stops earlier. One of our subscribers, we were talking about stop losses, and people get so many crazy ideas in their head, and it's really like how does it work? Like how do you do it well? How do you make it work? Like that's all I think about too, is if I'm back testing a system and a strategy, I'm not going to say, okay, well, I don't really want to take, I don't really like the stop loss where I had it on that back test. I'm going to move it up a bit. I'm going to make sure it fits my personality because I don't like taking losses. It's like that doesn't make sense. Like, how do you make money then? So, I consistently, agree with you on those facts. And I think it's crazy to really try to build a strategy, understand that it makes money one way, and then try to change it a bit because your personality doesn't like it or can't handle something. So jumping into stop losses. So when people ask questions about it, the questions come up, and this one came up a few times, which is like, oh, well, I could, this is on the retail side, so you probably don't hear this question much. But okay, if I have a stop loss, maybe I shouldn't use a stop loss. Maybe I should sell calls above it. Maybe I should buy puts and hedge instead of a stop loss. Some of these things get really wild. And like it's really like I like your strategy and the way you talk because like you make things very simple. And I think trading is like a very simple thing. And the more complicated you make it, the harder it is. And so like, let's just run through. You've been doing this a long time. Your stop losses obviously have space enough to ride these major trends and take advantage of outliers. So how do you do that? How do you set your stop losses right correctly as a trader?
Well, I want to distinguish stop losses from, like trailing stops. So when you first put a trade on and you're thinking about doing a trade, your system needs to have a predetermined exit where you're going to lose a small percentage of your capital. So let's say you want to lose a quarter of a percent. On every single trade, we calculate the quantity and that we want to do based upon volatility, the ATR, and then we place a stop loss that if the trade goes against us and it goes a certain amount against us, we're going to get out with a loss. So that's 60% of the trades, basically almost 60% probably. So um, you don't want that stop loss to be too close to the market. Like back in the old days, the turtle strategy was 2 ATR, and I think that's a little too close. And so probably don't want 10 ATR. That's a little too high. But something like in the middle that doesn't get you out too quickly and you whipsawed because every time you get out with a loss, you got to get back in at the high. And the high is probably going to be higher than it was when you first put the trade on. So if you're having 2, 3, 4, 5 losses in a row, you're continuing to get back in at higher and higher prices because the new breakout is just higher. So I'd say an optimal stop loss and then you just determine that from the back test. What is sort of an optimal stop loss? Doesn't get me out too much, too frequently, don't get whipsawed too much, but it keeps the losses manageable, not super small, but not crazy mega losses. And then, of course, the entry, I use breakouts, and then I have a breakout exit, which I kind of call a trailing stop. It's a trailing exit because, people stop. A stop is sort of an order technique that I don't think people use much anymore, probably. But yeah, so we have an entry breakout, exit breakout, and all of these time frames and look back periods, 100-day breakout, 75-day breakouts. This is sort of beginning to become something that's more reasonable than a 20-day breakout, which is too short term back in the turtle days. So all of these things just need to be determined by a sufficient back test. And it sort of pops out at you like, oh, wow, I see. You want to make money and you want to stay in these trends. And that's really the key. You want to stay in, not get bounced out too quickly because you're playing for these mega trends like NVIDIA or Eli Lilly. I talk about Eli Lilly all the time because it's like one of the greatest trends ever and it's still going on. And so you don't want to get bounced out too quickly. But then again, it's going to turn around and you're going to exit and you don't want to give back too much profit either. And you don't want to change the exit. If you have the 100-day low as your exit, you got to keep it there. You can't, well, I'll get out. It's a small profit at the 100-day low. And then if it's a huge profit, you're like, oh my God, I can't get out at the 100-day low. That's too far away. So you can't do that, And so because you've done this back test, you plugged in the 100-day low and the 100-day high for the entry or whatever, and the computer says, look how much money you're going to make. And you're like, yes, I am ready. Then you start dealing with these trades on a daily basis, and you're like, this is really scary. I can't believe I'm supposed to give these trades this much room and allow for this much volatility and this much give back. And the computer only says, look, I did what you told me to do. Here's the system. Are you going to trade it or not? And it's very difficult because we really do care about the current trade. It's the most important thing ever. And yet it's really not that important because we've committed to ourselves to make this back test work. We're going to apply these rules in the future for the rest of our life. Try not to change them too much and tweak them too much. But and this is what makes trading so difficult. Nobody really wants to look at it that way. Um, you know, if you look at the sugar trader this year, it's a good example. Bring up that sugar chart. It was a really big give back, but that allowed by following that system and handling every trade the same way with our system, this allowed us to stay in other trades that didn't crash. It looks like they were crashing, but then they rallied and went back to new highs and kept going, like cocoa or something, or
Okay.
orange
Yeah.
juice. Yeah. So it's really like you said earlier, it's like a situation where you look at all of these trades, and really a really bad idea for most traders is, hey, I'm going to go back and tweak my system so one of my favorite trades makes more money.
Mm.
And this is essentially what people are thinking about and doing because they really had pain about this one trade that they kind of mishandled. Well, you didn't really mishandle it. It's just the cost of trading. You know, some trades are going to look really stupid, but you just got to keep telling yourself the back test looked at thousands of trades. I'm really going to be successful if I carry out this system in the future, and just what happens happens. I'm going to look pretty bad on some trades, and people are going to come up to me and say, "Wow, I made a lot of money on sugar. I can't believe you waited so long to get out." You know, and you're like, "Yeah, I need to fix that." No, you don't. You're fine. You know, you'll make it up in another trade some other time that your friend will struggle with.
Yeah, that's the best way to explain it because I could say it, all the time, but you've had the experience of doing this for so long, and there's so many people that just when I talk about stop losses, it just turns into this like it's a debate, and it's like it's not a debate. There's a very simple idea. Understand the volatility of the products you're trading, and basically set your stop losses so you can take advantage of these trends. Trailing stops, that's what I use. My trailing stop is always very wide. I'm hoping not to get out using my trailing stop. I'm hoping to get out using an actual exit. So that has to be really wide for me, and then I'm gonna hopefully get out at that. Mine's a little bit more shorter term than yours. Like a 50-day low, 60-day low, something like that, and then I can get out of the trade, keep a little bit of my returns, and get on to the next one. Because if you don't have your stop wide enough, and if you don't have a system that's gonna get you out, 20-day low, like you said, it's way too short term. There's so many like Coco, for example, you would have been in and out of that trade 100 times. There that makes no sense. But if you
And
have,
one of the greatest trends of all time, and you wouldn't have made any money.
yes,
And
exactly.
that's what you want to avoid. That, I think, obviously.
Yes, and we're in the future space, especially like we're using leverage, we're taking advantage of 100% move. Like that's huge. I mean, think of 2020, 2021, like all the commodity trades were wild. And if you would have had a very short-term system, you would have chopped yourself to death and would have, yes, you would have made a couple bucks, but nowhere near what you did riding those trends. So I love the way you explain that.
And I
Um,
trade four different systems with four different time frames, all medium to long term. And then here's the key: they all make the same amount of money. So there really is nothing to find. There's no perfect parameters. They all have their day in the sun. They don't make the same amount of money on every trade. They can make vastly different amounts of money. The short term will do better sometime. The longer term may do better another time. But that's really so gratifying to me. I feel comfort in that. Wow, I've got these four different systems. They have different entry and exit points, but they all make the same amount of money. It's like you cannot go wrong. If you trade too short term, sure. But once you hit that sweet spot, you really, and then what's the purpose? That is to give you that's the secret of trading. I'm handling the trade the same way every time for the rest of my life. Every single trade, I'm going to just follow these specific rules. It has nothing to do with making sure you handle a certain trade the right way. If you followed your system, A plus, you handled it the right way.
no, that's perfect. So getting into that, we're talking about the understanding how to handle trades the same way every single time. So I want to ask you another question, which is, do you do this across all assets, all commodities, all bonds, do you basically trade them all exactly the same?
Yes, I certainly do. And I think that that's the way to do it. I think a lot of people do it that way. I do read and hear people, larger CPAs who have veered off that path a bit for their own reasons, I guess. But the reason to do that is because it's back to this back test again. And that is, if you handle all markets the same way, the same rules, and the longs and the shorts as well, then when you do your back test, you can count all the trades, the longs and the shorts, as part of your sample size. So if you, we're always looking for more um, trades to look at in a larger sample size and a better back test. And this is the way, this is the only way to get that back test. And that's why it's so important as well to use as few parameters as possible. One entry, one exit, a stop loss, not a bunch of different exits depending upon the size of the profit or things like this. And I think this kind of is an issue as well, minimally. I'm trying to be very conservative here. It's just sort of an issue too that I have with law management, correlation management, all sorts of what's called money management, risk management trading. It's really doing some damage to your overall back test. And so that's the reason I really don't, that's the reason I do a lot of things. I remember this was just hammered into our head in 1983, the importance of this sample size and these back tests. And if you didn't understand the question very well, but you knew one of the multiple choice answers was sample size, then just go ahead and guess sample size, because that was always the answer to every question, basically. Be very concerned about that sample size and build it up as much as you can, and optimizing parameters and strategy on per market is just not robust trend following.
It's your trademark trend following plus nothing. It's really important because I think it's also interesting to think of, when you think of volatility of each product and you think of people trading them all differently. I even do that to a little degree. Nothing insane, because I think everything is very similar across the board. But if you do it all similar across the board, you also see that most products have their day in the sun. Like, for example, like if you backtest 100 years, currencies were very volatile at certain points. If you backtest 100 years, you see bonds and all types of things have been volatile at certain points. So you really can trade everything the same way. I mean, commodities have been dead and low volatility at certain points as well. Bitcoin could be the lowest volatility product in 10 years, like who knows? Anything can happen. So how important do you think it is to own birds and have them fly around you while you're a trend follower?
Obviously, I think it's kind of, well, I don't know if it's important, but it's fun. I
Yeah.
rescued this bird like 5 years ago. My wife did, and I was like, I don't like birds. Get this bird out of my house. And so, like all good wives, she immediately went on Amazon and bought a cage. And then it only took a week or two, and this bird and I, we fell in love with each other. And yeah, she's just the best little friend, and she's very needy, and she's very demanding for food and attention. But yeah, it's kind of fun. No one's ever asked me that specific question. Yeah, but I'll bet you there might be some positivity to that. I'll have to go check my track record since I found the bird. I bet it's a little above average.
It's
Yeah.
I think, for me, I have four dogs. I have two cats. I love my animals to death. I have a little dog army. They're all little, two Chihuahuas, a Min Pin. They're all crazy as hell. And one has three legs. They're awesome. And honestly, like, I I think of the low times, because there is no trading where it's like everything's great all the time and I'm making returns every day. Like that's only on Twitter where people say that. That's not real life. If you're a trader, you're a portfolio manager, whatever you're doing, you're going to go through some rough times. And so, it's systematic, discretionary, whatever you are. So it's nice to be able to just have like a dog jump on your lap or a bird like land on you and like you kind of forget about all that because it's like, well, at the very least, at the end of the day, I'm going to go hang out with my dogs or my animals. So it doesn't really matter.
We have five dogs, uh, three Shih Tzus, two Black Labs, and I agree
Nice.
totally. It really helps you get your day going. And you know, sometimes I'll go outside and walk my dogs at 6 o'clock, 6 o'clock in the morning, and I'm this famous hedge fund guy, and getting out there with your dogs at 6 o'clock and taking care of them, picking up all that poop, really makes you really know, puts you in a good frame of mind to tackle the markets. You're not that special, these dogs, and they'll remind you of that all the time. But I think that they're pretty, we're pretty happy with taking care of our dogs and having them around, and really makes life a lot better.
Yeah, I remember the first fund I ever worked for, there was a bunch of people who came for money and they continued to be have money over time. And basically, I remember saying one day, like I'll be in a sec. I'm out back, cleaning up the yard with the dogs. And they like were like, wow, that's really noble of you. And I was like, that's that's you got animals. Like, don't you guys have animals? None of them had any animals. And I was like, man, that's a sad existence, like you guys should really get a dog or something, like I don't know. I really feel like not that everybody, there's people who don't like animals, fine, but I don't really mess with people. If somebody tells me I don't like cats, I don't like dogs, I'm like, oh, you're kind of a weird person. You probably don't like people or get along with people either, honestly.
Yeah, yeah. That's funny. That's really funny. Yeah, my wife is insane about pets and birds and all sorts of animals. We did a big trip to Australia last year to see some trend following friends. And most of the time we spent hiking and playing with animals and snorkeling. And Australia is a great place for all that.
Yeah. No, cool, Jerry. So, yeah, I can just edit on that, man. Thanks so much for coming on. It's always a blast to just chat with you and talk markets and hopefully you come on again soon and have a great one, man. And everybody, if you
Yeah,
guys are definitely follow Jerry on Twitter. Definitely check out his spaces. It's very easy to find Jerry Parker, legendary trend following turtle trader. All right, thanks, Jerry.
thanks for having me. Let's do it again soon. Thank you.